Okay, so in general, what we kind of have are, we do some activities. And then we want to post them into our assets equal our liabilities plus our equity account, right? And so we have kind of two parts to this. We have the paid in capital, which is like your stock. And then you have retained earnings. And then you have revenue minus your expense. Okay, and that's all under equity, these four categories of it. So what we do is we're posting activities in there, and then we get that trial balance that we were using. Nope, this is not. And this is all from like your notes. So this one would be in handout 4 if you wanted to look at this. Okay. So we've done these transactions, we've posted them in our journal entries, and now they're in their respective accounts. Okay. And so a trial balance is all of the balances in the accounts in your accounting system. Okay. And this first part here through here are assets. Okay. You're not on the right page. Here's where we are, page 5. Those ones are assets. These 3 are liabilities. And these parts are equity. Now, hold on one second. Give me 1 second to finish this part, and then I'll help you with it. So, and then this one would be revenue, and the rest are going to be expenses. And it's always going to break down that way. Okay. So your accounts may have different names, but you're always going to have the assets first. You're always going to have the liabilities, then the equity, then the revenue, and there can be more than one account. And then you have the expenses. So you were going to ask a question before I cut you off? I'm sorry. Okay. All right. And the way this works is I just put it all together on one so that you guys could kind of work on it together. So this unadjusted trial balance is you say, okay, this is what happened so far. Now, at the end of the period, which could be a year, a month, or whatever they're doing the financial statements for, you have these adjusting entries. And those adjusting entries are made to report expense that otherwise you might have missed, or revenues that you might have missed into the appropriate period. So these are the adjusting entries. And remember, we either accrue or defer with those. So you can look and see on your paper the entries that we kind of made if you look back and see the adjusting entries. So there are a couple different places that they come from. And let's go ahead and, I've got multiple classes here, so it's going to take me a second to find yours, but I'll pull that up. Okay, so these would be the adjusting entries. So the additional facts are collected to make the adjusting entries. So these A through F are all shown here and with their entries. So are you looking for, like, I didn't put account information in there, or? So this one right here, the December inventory count of computer supplies shows $580 still available. So we would have a computer supplies expense, and then we would be reducing our computer supplies. And so how do we know to do that? So assume that we're looking at this because this is our unadjusted, right? And it says we have computer supplies of $3,645. But, and this is what interns and new employees get to do, you get to go in and count the supplies at the end of the period, whether it be a month or a quarter. And you went in there and said, okay, we've only got 5 boxes of paper left. And let's just assume it's really nice paper. So that's $580 there. So what we have to do is reduce that account, okay? And remember, how do you know whether or not to debit or credit something? So for assets, remember, a debit increases and a credit decreases. Okay, now we get on the other side of the sign, right? And so for liabilities, you have debit, credit, and here a debit decreases and a credit increases. Now, all of this is the same for this. So paid in capital, a debit decreases, a credit increases. Retained earnings, same thing. Debit, credit, decrease, increase. And you've got revenue, debit, credit. And so this would decrease and increase. Expenses now have this negative sign. And so they flip, and they're the opposite for equity. You have a debit, a credit. Here, a debit increases, and here, a credit decreases. So when you're saying, how do I know which entry to make? I'm looking at that transaction and saying, okay, I've got what shows in my records as $3,000 in computer supplies. And that's a debit balance, right? It's an asset, it's a debit balance. I have to get to 580. And so I have to subtract out 3,065. So that entry increases my expense because I used up those supplies during the year, and it reduces my assets. So here, I'm decreasing my assets by, I think it's 3,065. And I'm increasing my expense by 3,065. And so that's where the entry comes from. It's just the accounting words. Yeah, and what you want to do is most of them will have either a drop-down box or will tell you, and so these are all the accounts. So in this case, I tried to use the language that they use. So computer supplies expense, I should have used computer supplies expense because I want you to be able to tie all this together when you're looking at it in your notes as well. So I think I went a little far on your question and answering, but really it's because I'm taking it right from the client's list or the company's list of accounts. And so that's what I use. And so really focusing on, okay, these are my assets, these are my liabilities, these are my equity, revenue, and expenses helps you understand what type of account you're dealing with and why we selected it. But most of the time that information is given. Okay. So that was the first one, 3 months inventory count on computer supplies. Now they say 3 months have expired since the 12-month insurance premium was paid in advance. So we paid a 12-month insurance policy and they said 3 months has expired. So we paid for a year and we've got 3 months that we have to expense because we used it up. And why do we do that? Because we want to match our expenses in the period that was incurred. So insurance expense is what the account that we're going to use, and we're going to reduce our prepaid insurance. Now remember, the prepaid insurance they said was 12-month prepayment. So what we did was we took the balance, the 2,220 prepaid insurance balance, and we divided it by 12. So that gives you our monthly cost, our monthly expense. And then we multiplied that by 3 months. And in order to get that number, let's see. So we had 2220 divided by 12 is 185. And then we multiplied that by 3 months, and that gives you the 555. Okay. Part C says, as of December 31st, and we're supposed to know this is an employee, has not been paid, but they worked. And so we owe them that money, but we don't have it booked yet. And so we have to record the wages expense, which is 4 days at $125 per day is 500. And then we record a wages payable because we're going to have to pay that employee. And again, I try to use their language for it. One of the challenges is, that could be salaries and wages. It can be a lot of different things. So the nice part about it is that on your questions, you're going to have drop-down boxes and things like that, are the accounts going to be there? So you just have to say, okay, is this an asset? Is it a liability? What type of account it is? And so helping you understand what type of account is really goes a long way with when you're doing these. You have depreciation expense, accumulated depreciation. They gave us those numbers based on the formula. So we had 20,000 divided by 4 years. And so that's 5,000 a year, but we only had 3 months of it. So that's 3 months, and here 3 months. Keep in mind that we just opened this company, right? And so we're starting on October 1, and that's why everything's only got 3 months so far. Now, once we enter in, remember this first one is what we had, what we started with. Somebody goes and runs us a trial balance. And then we put in our adjusting entries. Those are those A through F that we entered. And we just match them up. And now we just add across or subtract across depending on what it is. So this is a debit account, and assets have a normal debit balance. And so we don't see any other adjustments, so it's just the same. Now accounts receivable, no adjustments, it's just the same. Here, we have a debit, and here we have a credit. So that tells me I have to subtract those. So essentially, what I'm doing here is I already had this balance in that account, 3645. I am reducing it by this balance. And so I'm getting 580 left over. Here, I had prepaid insurance, 2,220, 555 of it was used up. And so that's what's left over. Prepaid rent, we used 75% of it, so 3 of the 4 months. And so the credit there reduces that balance down to 825. Our office equipment, remember, we carry at historical cost, and so they stay the same. And then we added depreciation and office equipment. Yes. So that's what you have to do. You have to remember this basic thing and saying, what am I doing? Am I decreasing it or am I increasing it? If I'm decreasing an asset, I know it has to be a credit. If I'm increasing it, I know it has to be a debit. That's different for liabilities, and that's different for equity. So what you have to do is know what type of account. Fortunately, we're pretty transparent in accounting. You don't have to memorize a lot of stuff. If it says expense, unless it says unearned, it's always an expense, right? So we're pretty transparent in how you're going to be doing it. And so the way this is set up helps you understand that. So you really have to think, am I increasing that asset? Am I decreasing it? What am I doing to that specific account? So if you are, using prepaid, that entry is going to be the same over and over again, right? I think that's what you're asking. Yeah, I mean, if we're increasing it, it's always going to be the same type of entry versus if we're decreasing it, it's always going to be the same type of entry. So if we look here, right, we were increasing our expense, right? So we know if we increase our expense, then we're going to have to debit that expense. Okay, and so that's just one of the things that you kind of have to memorize is this little chart here and say, okay, if I want to increase my expense, I've got to debit it. If I want to decrease my assets, I've got to credit it. So that's how you know how these transactions are going. Now, I know most people in this class are not accountants, so we're not focused too much on the journal entry, but you want to focus on, does it increase the balance or does it decrease the balance? Your exam will have a couple of these journal entry parts to it, but it's not all about journal entries, okay? What you want to focus on yourself is is it increasing it or decreasing it? And how does that change the balance? Okay, so this becomes our adjusted, right? Our adjusted balance sheet. So we've made our adjusting entries, and this is our adjusted. And what we do is we just take the information from here and these adjusted balances, and we plug them into our income statement and our other statements. Now, you had this question about statements. How can I help you understand this statement better? Okay, so computer service revenue, right? Computer service revenue, 31,824. They're all coming from this column, these two columns, debit and credit, right? So if I want to know what computer services revenue is, I look over and I say it's 31,284. And so I bring that down. So the answer to that is no, you're not always going to have this part filled out. But if you have a trial balance, then you know what it is. With an income statement, you're just putting in all your revenues and all your expenses. So I cannot. Income statements are, so you, like an income statement is just your revenues minus your expenses. And that's it. Right? And so since we have a trial balance, you know what your revenues are, you know what your expenses are, and all we did was just take it from the adjusted balance and put those numbers in there. But I want to help you kind of understand. So let's, yeah. Right. Well, it doesn't matter technically which one you do first from the financial statements. Your textbook has a pretty good um, description of this. Let me show you. Your exam is set up for the weekend of October 3rd. It will be a combination of multiple choice and a couple problems. The multiple choice will usually make up 60 to 70% of it, and then the other 30% will be some of the. So there'll be a shorter problem than the long ones we're working on here, so it'll be a part of it. But I'll have a practice test that you guys can look at and to give you an idea. Well, so I don't generally do a review, but I will give you guys kind of a guide. And if you have questions, I will answer them for you. What's that? Yeah, I will put together a study guide type thing for the exam. Okay. The homework is designed to get you to understand the material. The questions that you're going to see and that the types of questions, the multiple choice ones, are the ones that I kind of include in the handouts. So there are more concept questions and I'm taking the longer ones, but you will see some of the short ones that you have to do. Don't worry, I'm not here to try to trick you on anything. So you'll have an idea of what you're looking at. I'm just trying to find where this there's a really good like map in here. If you're a business major, you take the second accounting, but it doesn't build on this one. It is basically just giving you more of a foundation. So you learn kind of some of the internal stuff, um, not what we're learning here. Don't get me wrong, we have lots of crossover and it's very same, but people that struggle with this do well in that. And sometimes people that do well in that struggle with this one because it's different. Okay, so here we have this adjusted trial balance. And then we prepare the financial statements. So yeah, of the, okay, 4-1, thank you. Okay, so this is the one that I wanted to show you because this kind of links all of the statements. So you asked, how do I figure out where all this stuff goes, right? So you're just looking at this adjusted column in the trial balance, right? That lists all the accounts and it breaks it down and it shows you, okay, your assets, your liabilities, and your equity are going into your balance sheet. Okay. Your stockholders' equity section comes from also those accounts. So you can see, all right, it feeds in here. And then you have, okay, my retained earnings, the common stock that I issued, the balance, the net income, the dividends, and the ending balance. So this is your stockholders' equity section, okay? But you can see exactly from this where these things are coming from. So like your revenues here, you see fees earned and rent revenue. Let's see if I can make this just a little bigger. It's a little bit of a pain. Okay, so this captures most of it, but here you have your 16,840 and your 120, right? That comes from that last column. And then all of those 45, 25, 20, 40, 1600, 985, 50, and 45. So that's how they're filtering into these other statements. And so on our thing, we're going to take these, and they're going to be here and here. And then we already have the numbers yellow highlighted. So those are there and there. So that's where those numbers come from. Now on your next one, your stockholders' equity, this looks at your equity accounts. Okay. And so those go in the information here. Now keep in mind that retained earnings is always its beginning balance, right? And so we're calculating the ending balance. We get our net income from here, right? It comes directly down, and then our dividends come from here. Okay. Now the balance sheet. No, it's too bright. Okay, and so those are our assets. And then we had our liabilities. So these are our liabilities. And those go in here. And then these, the equity accounts, are the same green ones that we used for our stockholders' equity. So are you seeing how they're flowing the numbers, where they're coming from? Okay. So any other questions? I mean, if you look at your handouts or you look at any of the questions, all of the stuff in this class just builds. So that's what we're doing. So we did journal entries for here, and then, you know, you're building on them. But we're going deeper in depth on the later chapters. And so it's not necessarily like, you can't be completely clueless about this part, but you can, you know, not understand it completely, because we're going to look at the details a little more closely. But what we've been doing is the same thing for the chapters. We've been sort of building up to this, and the next chapters will kind of build on it as well. But I will get you guys some sample questions. I'll have more multiple choice type questions that are available for you, you know, like these that you see. This one, example 3 here, would be an example of a type of question that you would see on the test. This one would probably be a like 10-pointer versus a 3-pointer. And so remember, kind of just what are we doing here? What are we learning in the class? And that's just, we're kind of learning these cycles. We're learning, okay, what happens when an activity happens? How does it affect the organization? And then we're going to work on these trial balances to prepare the financial statements. And there is, I think what else there is out here. So. One of the other faculty members shared this with me. I have to still go out there and publish all of it, but these are kind of the things that you're going to have that are the types of questions you're going to have. And so you can go out there and you can look at this and practice these. And if you have any questions about them, we can walk through, we can talk about them, I can do them. You know, it's available to you. Yes. They are similar to the questions that you'll be on the exam. Those are the types of questions that you're going to see. And this is not graded, but you can jump in there and you can take it. And there's just a bunch of questions that you can see that are available to you. And these are exactly like the types of questions that you're going to have. So I'd highly recommend, if you feel like you're struggling a little bit now, look at these questions. And then next week I can do another thing like this for you guys and help you with it. I am here to help you. I know everybody doesn't learn the same way. I've been teaching long enough to know, sometimes people need a little bump in a direction. But it always helps for me to know where, where you're struggling. But I also want to, are there any other questions? You sure? Right. Well, I definitely don't want to confuse you. And so if you ever want to meet and just talk, we can do it over Zoom or we can do it in person. I have, most of the time I'm not here on campus on Wednesday evening, but I can do a Zoom for you guys if you guys have things going on. I just want to help you guys get through, and I want to see you be successful. And if you ever need them, there's always videos out there that the class, the audio's been better on these later ones. So I'm hoping that will continue.